Welcome to the Corporate Reality Arc. Today, we're explaining AS 16 through 22, the battle between accounting truth and corporate manipulation. You think big companies always tell the truth? What if I told you the bigger the empire, the deeper the illusion? A massive corporate city with glass towers shining, but cracks are slowly appearing, revealing the underlying instability. In this battle, the glowing AKARI represents the absolute truth of accounting, while the smirking manipulator seeks to obscure reality. This is not just accounting. This is the corporate reality arc, the battle between truth and manipulation, covering AS 16 through 22. We begin with AS 16, addressing how borrowing costs should be treated, focusing on capitalization. The manipulator's plan. We took a loan. Let's hide the interest inside the asset cost and artificially inflate the value. AKARI intervenes. Only if the loan is used specifically to build the qualifying asset, then that interest can be capitalized. Otherwise, it must be expensed. Next, AS 17, demanding transparency in segment reporting when a company operates multiple business units. The manipulator sees the company split into many stories and thinks, let's hide the loss-making segment to present a healthier overall picture. AKARI reveals the truth. Every operational segment must be disclosed and detailed, or the truth about the company's performance stays incomplete. Moving to AS 18, related party disclosures. This rule ensures honesty in transactions involving connected parties. In a dark room, the manipulator declares, it's just a family deal with a subsidiary at a preferential rate. No one needs to know about it. AKARI warns, related party transactions must be clearly disclosed, regardless of how minor or internal they seem, for investor protection. AS 19 focuses on employee benefits, acknowledging that staff loyalty creates long-term financial duties. The manipulator casually dismisses responsibility. We paid salaries. That's the end of our financial duties to the employees. AKARI stresses the long-term view. Gratuity, leave encashment, and pension funds are future obligations derived from current service, and they must be recognized in the present. AS 20, earnings per share, a metric crucial for investors to understand the true profitability per share. The manipulator aims to deceive. Profit looks impressive, but let's increase the number of shares to manipulate the perception of EPS and hide the dilution. AKARI asserts, dilution matters. Both basic and diluted EPS must be calculated and disclosed. This reveals the real truth of per-share profitability. We reach the climax of the corporate reality arc, AS 21 on consolidation and AS 22 on taxes. AS 21 dictates that parent and subsidiary companies must consolidate all financials to form one single reality. The manipulator cannot hide losses in subsidiaries. Everything must be combined.